Everything in this video is not intended as financial advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie, and let's take a look at this week's midweek market update. I'm going to start with a small ETH merge discussion, migrate into some on-chain analytics, talk about stablecoins a little bit, and bring it home with some TA at the very end. Merge is still on for ETH, migrating from proof of work to proof of stake. I'll be excited when I no longer have to say that. And it looks like it's estimated for exactly a week from today, if you're watching this in the past. So on 9/14, this should be live. And assuming all goes well, we'll know rather quickly what's broken, what's not. It's very unlikely the ETH chain itself has large issues, not impossible, but if large issues do emerge, they will likely be fixed quickly. The biggest issue really that could emerge is a chain halt or a chain split. A chain split is sort of self-healing. This just means that there are forks on the proof of stake side of things. There are multiple forks and stuff where the quickest chain eventually wins out and takes over. And a chain halt would probably be more catastrophic, but not unfixable. I don't believe they've had that problem in any of the test environments. So it's just important to know all the possibilities, right? I don't want to overly concern people. The chain itself probably going to be fine. Everything on top of ETH, DEXs, lending and borrowing, oracles, bridges, who knows? That stuff hasn't been tested as well. And if you want to stay risky, then you're going to stay in DeFi land. You're going to think everything is fine. It very well might be. The safest thing to do is just to move everything into a hardware wallet for the time being, or leave it on an exchange. Don't plan on moving anything around on a week from now or a couple days after, right? Just let whatever's going to happen. Be prepared up until that moment. But I wouldn't plan on everything going as planned because you just never know. You never know. It's a big transition, something we've never seen before. Literally touches almost every chain, if not everything in crypto. Touches every exchange, certainly. Exchanges are saying that they're going to close deposits and withdrawals, at least until everything is safe and they're given the all clear on the protocol side of things. So it's an exciting time. We'll see what happens in a week. Moving to on-chain metrics, transaction counts, active addresses, everything in general across the board, kind of slow. You can see in the green here, active addresses picking up a little bit. These are addresses that have changed in value from the prior day. These are all monthly averages now. White is the price of Bitcoin. So you can see transactions dipping a little bit with price, active addresses rising a little bit. ETH looks slightly different in that you had a massive spike in on-chain activity a couple weeks ago, and that's come down now. And I think in general, all this stuff's just going to flatline a little bit until the merge, until everything goes well. Then you'll potentially see DeFi activity picking up again. You'll see exchanges opening their doors again, right? The issue for exchanges and what's happened previously with some of these forks is what's called a replay attack, which is effectively a double spend where you're spending the same ETH on both chains should there be a chain split, or should the ETH proof of stake and proof of work chains both be listed on the same exchange, right? It can be a massive confusing mess. And we've seen this before with forks in the past. So from an exchange perspective, it makes the most sense to just wait, close everything down, figure it out after it's completed. So I wouldn't fault them from that from a business perspective. Obviously not the most decentralized thing to do, but it is what it is, you know. One other thing to note is for all these on-chain metrics, for ETH specifically, things are going to look different post merge. Proof of stake chains typically see higher transactional activity. They typically have lower fees. This isn't always the case. They're typically more scalable. They have more throughput. So you can't really compare today's numbers to whatever the numbers are going to be a week from now and thereafter. It's just going to be a completely different chain effectively from a protocol perspective. It's changing the DNA of how this thing works on the base level. So the metrics are going to have to be adjusted or changed or read in a slightly different light. BTC and ETH on exchanges still continues to decline. BTC up slightly here. What we've seen in ETH's case is because many of these exchanges have not come outright and said that they will support this, fork, which is likely never going to go anywhere past a month from now. But this ETH proof of work fork that is seeing some minimal support on Asian exchanges and Asian miners. We haven't seen Western exchanges say, we're going to for sure support this fork. So users who want the fork can remove their coins from those exchanges, hold ETH in their own wallet or somewhere else that does give them this fork airdrop coin, and likely sell it immediately after that thing goes live. But as long as it has one developer and one exchange listing, it could live on forever as a zombie, like many of these forks have: Bitcoin Gold, Bitcoin Diamond, Bitcoin SV, Bitcoin Cash. Just zero utility, no community, right? But they're listed and they have a minimal pulse, right? They're in a coma, but they're somewhere. That's what we could see with this ETH POW fork. But no one on the custodial side of things, if you're holding ETH, you don't have to do anything, right? I would only get slightly concerned if you're in DeFi and you're in all these bridges and things. Who knows what's going to happen there? But if you're in a hardware wallet, again, you're probably safe, sound, everything's fine. Bitcoin's Lightning Network, which is Bitcoin's layer 2, has continued to pick up in capacity, much like a bar tab with a debit card system. There needs to be money in the system in order for the transactional activity to work. In order for the capacity for transactions to actually increase, you need Bitcoin sitting in layer 2. So this is one silver lining of all of the bearishness. Price-wise, we're continuing to see increasing use of Bitcoin's layer 2 network called Lightning. If we look at a derivative metric, if we're trying to understand on a relative basis, are we overbought, oversold, we can look at MVRV, which is a measure of market cap versus the aggregate average of all the chains that have moved, all the coins that have moved recently. So essentially the cost basis of the coin market cap versus the actual market cap. Anytime the market cap is several multiples above the cost basis of the coins, which you could kind of view as unrealized profit, we typically see an all-time high spike, right? We see just way overbought conditions up here. And the inverse is also true. When the cost basis is above or equal to the market cap, really for an extended period of time, then that's typically representing oversold conditions or levels at which bids start to step in, right? We've seen this a few times, right? 2011, 2012, 2015, 2016, 2018, 2019, and then COVID 2020. In most cases, we're down here for a while, 2 quarters, a quarter at least before things start to pick up again. So as bearish as the technicals look, this is another variation on a silver lining to me, that we're sold off enough on a coin basis percentage-wise level relative to market cap, where this historically has been a point in which we've sought a bottom. Doesn't mean it is the bottom. It just means this is how bottoms start to form when MVRV looks like this. So switching gears to stablecoins a little bit. Stablecoin wars are heating up. As Yoda would say, begun the stablecoin wars have. Really, they've been in a soft cold war maybe for several months, all really since DeFi took off in 2021. Recently with the Tornado Cash stuff, I'm not going to rehash that, in USDC versus Tether versus the centralization of USDC in DeFi. That's a whole other can of worms. But crypto as a whole needs stablecoins to enable ease of onboarding, ease of use, interoperability, ways to trade this stuff that isn't requiring onboarding USD every time. So it's certainly been helpful to grow the ecosystem. And I think we'll continue to see more and more variations of stablecoins, hopefully non-algorithmic, but from different players. And I'll get to that in a second. If we look at the circulating supply between USDC, Tether, and BUSD, which is Binance's stablecoin, Circle's USDC was poised to overtake Tether because Tether was thought to have an illiquid balance sheet or illiquid reserves relative to what they had in circulating supply. The market corrected for that and said, okay, we want to redeem all this Tether. They did. I've heard not a peep from anybody who've redeemed Tether previously that they had issues. I've had issues in the past with Tether redeeming it at a previous company. So I know that issues have existed in the past, and that's why they have this baggage with them. It's understandable. But the fear seems to have died down a little bit. Those that wanted out of Tether got out of Tether. were able to do so. Those that moved into USDC have done so. And as the rates cooled off for Circle, the reason to mint it cooled off a little bit. It's not in DeFi as much as far as activity is concerned. Recently, it's cooled off a little bit. But importantly, it hasn't just reversed straight down to zero. It's still in the ecosystem. It's still in the pipes, which is important. And here comes Binance USD now saying, we're going to convert all of our pairs on our books to BUSD, which makes sense. If you're, it's a terrible example, but if you're a casino, you don't want to be using someone else's chips, right? You want to be using your own chips. You don't want to be reliant on USDC's reserves or USDT's reserves when you know that your reserves are exactly what you want them to be. They use Paxos, which is a known stablecoin issuer for BUSD. So they continue to grow. And as a user of Binance, if you use Binance, you're likely to trust Binance and trust their stablecoin. And if you don't, you can leave, right? You can go somewhere else, which is the beauty of all this. There's tons of competition here, which at the end of the day is really great for the user. Binance USD and the circulating supply side of things starting to pick up more and more. And I think as we see more stablecoins, these circulating supplies are going to jockey around more so than they maybe ever have been. And one thing that would change that would be rates for lending this stuff. So Circle dropped their rates way down a few weeks back now, and they've just stayed extremely low, both short and long term, relative to where they were. Now, if you add inflation into the mix, that's another reason is at an institutional level, not to just use Circle's yield product directly. You may find the 10-year treasury or some other vehicle equivalent to a better yield, right? So it makes sense to me why Circle's issuance has sort of stagnated in that regard. Now, they are multi-chain, like Tether, which I'm going to show in a second. They are multi-chain. They are branching out beyond just Ethereum, Stellartron, Avalanche, Flow, lots of different places, which as a stablecoin, that's what you want to see. As a user of these stablecoins, that's what you want to see. You want to be able to move money around quickly. If I send a wire, it may take hours, it may take a day. If I send ACH, it may take who knows how long, right? We have better technology now, and people want to use it. So it's good that these are going multi-chain. Now, like I said, Tether cleaned up their act a little bit. They're hiring they have hired a stand-up accounting firm. I haven't seen a monthly proof of reserves yet, but they did release one in the past couple weeks from this new accounting company. So people are going to hate Tether until the end of time. The sun's going to explode. People are going to die hating Tether. That's just the way it's going to be. So you're constantly going to see headlines about Tether collapsing, Tether shorts, Tether. That's never going to change regardless of what they do. It just is what it is. But they're trying. At the very least, they are trying. And they are also multi-chain. I haven't seen this widely reported, but I think this is the first period in which Tether issued on Tron has actually exceeded Tether issued on ETH. One thing that actually worries me about where the stablecoins are headed, they're becoming less decentralized in the sense that we're seeing support in Asia for something like Tron for Tether. Tether in Asia is huge. Tether in Europe, large as well. USDC obviously is a US business, very big in the US. So we may continue to see mints on Tron and overtaking all these other chains because that's where Tether is utilized the most in Asia. That's where Tron is utilized the most in Asia. But Tether is also on other chains. So this may shift around constantly. But it's good to see, it's not just ETH anymore. It's everywhere. Pretty much any layer one worth its salt has some form of stablecoin going for it. And like I said, Tether continues to try to clean up its act. They're continuing to reduce commercial paper. They have no Chinese commercial paper, according to them. This is an official audited statement or anything, but they're getting better. Years ago, we didn't even have any attestation about anything regarding the reserves. And in today's day and age, I don't think that would fly for something as big as Tether. Back then, it was much less of an issue, much less of a concern. So things are getting better on that front. Here's the Binance announcement. They're auto-converting USDC, USDP, TUSD to BUSD. In the grand scheme of things, as a user, as a trader, I think this is great for the order book. It just condenses all the pairs. Otherwise, you're seeing all these pairs with all these different stable coins. And as a user, you have to convert, aka trade between USDC to BUSD. It's just a mess. It's honestly better to be like this from a trading perspective. There may be some issues with people, who don't trust BUSD. Then, like I said, they're going to leave. Whatever, that's fine. Let them. But curiously, USDT not on this list. So I don't know if that means Binance will not have USDT pairs anymore or never did. That remains to be seen. But it looks like they are going to be halting certain USDT pairs. So again, if you're Binance, this makes sense. This makes sense for any exchange with a stablecoin to use the stablecoin that the exchange issues. We're also seeing stablecoins coming out of DeFi now. This is Curve USD in the works, imminently, likely after the merge. I don't think any DeFi developer is excited about releasing something new pre-merge and then having it break, right? They're going to wait till, again, they all clear and everything on ETH is okay. Aave is also in the process of releasing their own stablecoin. Aave is a lending and borrowing service. Curve is honestly more analogous to just the general FX pairs, but trading between stablecoins. I mean, that's really where most of their volume is most of the time. So it makes sense to me that they would have a stablecoin as well. So things are definitely heating up on that front. And inevitably, we're going to see more regulation around all of this in the US, specifically around what can stablecoin issuers' reserves be if they're in the US, right? If they're regulated, who can operate within those parameters. And maybe we see outside stablecoins get issued, that aren't necessarily in the ecosystem yet, once regulation becomes clear in the US. I think a lot of people in general, including myself, are just waiting for that. We've seen enough shenanigans at this point with everything that's happened over the past couple months that I think all of us are ready and willing for some regulation around this topic. Flipping gears to technicals, BTC zoomed way out. If we take the telescope or the microscope, we zoom out, right? We're using the course adjustment. And the grand scheme of things, if we look at, which is basically a line of best fit, it's called the power law corridor. It's fit around the previous 3 all-time highs. It's within the acceptable range, let's say, for continuation, right? If this thing continues to droop below the maximum low, which is around 14K at this point, then that may be a different story. But just like MVRV, this tells me it's 6 months from now, 12 months from now, however long it takes, looking back on this moment, if a bottom forms down here, that would make sense. Historically, based on on-chain metrics, based on technicals, it would make sense. No guarantee, but it would make sense. In the near term, however, we're starting to break levels that are problematic historically, specifically the previous all-time high. We've never really revisited the previous all-time high. So at this point, we've retraced all of the 2020, 2021 exuberance. We're below the 200-week moving average, which we typically don't live below for an extended period of time. And again, on a near-term basis, we're definitely below the 200-day moving average, which is a general litmus test for most people for downside expectations versus upside expectations. It's much easier to go down when we're below the 200-day moving average than when we're above the 200-day moving average. The last thing on this chart is the pitchfork, which again sort of illuminates this trend channel that we're sort of stuck within. So if I want to be bullish, if I want to get bullish, we want to be back above the 200-week, out of this trend channel, ultimately back above the 200-day moving average. You can see we haven't done any of those things since the beginning of the year, really. We crashed into the 200-week, and then we're sort of just consolidating in this level. One other thing I want to introduce this week, technicals-wise, is the Ichimoku Cloud. And much like the 200-day moving average, many people use this as a litmus test for trend. So if it's above, we're bullish. If it's below, we're bearish. And using that fine knob on the microscope again for adjustments, we can see much like a general moving average cross, we've got a slow and a fast moving average here that provides additional expectations for upside or downside. This is how it looked in 2020. Post-COVID, we bounced back above the cloud, and we held above that all the way until April 2021. Similarly, since the end of 2021 now, we've really been below the cloud the entire time, below those fast and slow MAs. And again, we're seeing the opposite of a bullish cross on those MAs over the past couple days to the downside. So this really does not give me any optimism for BTC at this level. The expectation here is certainly we break lows based on this technical picture. Now, once we get back above the cloud, much like the 200-day moving average, then the expectations move to the top side. One thing that could change this would be if the ETH merge goes well and BTC sort of gets dragged up with everything once ETH starts to move up, should that happen, right? Now, if the ETH merge doesn't go well, if there's issues, if there's problems, certainly the price chart's going to just get the wrath of everyone dealt upon it. And realistically, again, that 13, 14K level is a possibility. Certainly not an expectation that we're swiftly moving to that area, but that's the next level down. We'd expect some sort of response, aka known as support. So we are on very thin ice here with the technical picture, certainly. ETH looks better, but not great. ETH had that mean reversion attempt to the 200-day. And again, it could not break it, could not break this trend channel that it's still in. And it's still in this mixture of previous all-time high, 200-week moving average, below the 200-day moving average. So ETH looks better than BTC, but not by much. It's still definitely on the bearish side of things on a relative basis, and has been since the beginning of the year. So post-merge, what I'd love to see is for ETH to first break this channel, hold these levels, break this channel, break above the 200-day moving average. Within the next week, this also needs to not break down. So previously we had this inverted head and shoulders chart pattern. Now we have a setup for a multi-shouldered head and shoulders chart pattern, or just a vanilla head and shoulders. And these are another sign of reversal if we break this horizontal level. So if ETH breaks 1400, that suggests a lower price based on this chart pattern. If it's able to break 17, that suggests we've negated this chart pattern, and at that point we've also likely gotten above that trend channel. ETH on the cloud also looks slightly different than Bitcoin. It's in the cloud, it's in this neutral turbulent zone, making up its mind whether or not this is a true reversal or whether or not this will be continuation if it falls out. No matter how this looks on a technical basis leading into the merge, that's the checkpoint for success or failure at a protocol level. So it's certainly going to lead the discussion and conversation after that. And ETH against BTC looks phenomenal. Again, knowing what we know about the cloud, this looks very different than anything else in crypto on a USD basis. Against BTC, ETH is above the cloud. It's bullish. It's setting up for that bullish, what's called a TK cross. You can think of it similar to an MA cross. So this thing is ready for higher highs. The technicals are there, the picture is there, the narrative is there, the story is there, the eyeballs are certainly there on ETH against BTC. So the heavy expectation here is definitely that this pushes highs in Q4, potentially retests previous all-time highs in Q4. Just to finish up, two charts that look decently okay, even better than ETH, using that technical lens where we're inside of the cloud here, we're close to the 200-day moving average, would be Matic and Atom, both of which are layer 1, both of which are in the mix for this multi-chain world, this multi-chain universe, adding projects, adding utility. So at least on a fundamental level, it has a pulse, it has things going on. There's tons of on-chain activity for both of these chains. And so it would not surprise me that both of them also do decently well in Q4 should ETH not explode everybody at the party, right? But again, Matic very clearly acting differently above or below the 200-day moving average. Certainly a self-fulfilling prophecy most of the time, but it's quite stark with a lot of these altcoins on how they behave, where you see levels that are important and levels that are not so important, on the downside. Atom, slightly messy relative to the 200-day moving average historically, but again, this thing into Q4 is getting ready for potentially a move higher. No promises. No one has a crystal ball. Best we can do is look at setups and look for setups like this and be prepared. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.